On which end of the market you are, Sunil? Because there's part of the street which believes that the next leg of outperformance will come from consumption purely because the sector hasn't done much. But then there are others who still believe that capital goods and industrials is the space where the momentum will continue to be with. What will outperform, consumption or industrials?
Yeah, I mean that's a great question. Look, I mean to be candid here, we were before the elections, we were in terms of our allocations very much favoring the broad investments or manufacturing over consumption. So we had sort of power and utilities as overweight, we had infrastructure as overweight. We did like the broader real estate recovery story and the way to play it through the building materials. We were actually underweight most of the consumer segments, including staples, consumer durables. We also were underweight some of the consumer-facing banks, specifically ones that are more geared towards unsecured credit. Right. Post the election, the one change we have done is that we have neutralized staples from being underweight to market weight. And so, as I said, our expectation is not that there is a pivot towards consumption over investments. We think some of the infrastructure things, as I said, will continue to perform well. But there will be a slightly higher tilt towards welfare spending. So that means maybe kind of staples do a little bit better. Again, if you think about sectors, we do like autos. We have been overweight autos for a while. But again, if you think about sort of investments versus consumption tilt there, on the margin, we think maybe two-wheelers, three-wheelers, tractors, they may perform better. So even within the same auto sector, we are a little bit tilting towards kind of the ruler side of things. And as I said, staples, we have neutralized that. But within staples also, if you sort of granularly look at that, you got the HPC segment, and then you got the food, the companies that are more geared towards sort of food. And we think home and personal care probably does a little bit better there. So I think you can kind of pick the pockets. I wouldn't say it's investments or consumption. I think we are sort of pretty balanced in our overall allocations post elections now.
Sunil, is the base case assumption a meaningful rural recovery, or is it placed purely on valuation comfort, some of those pockets that you talked about?
Look, it's not a strong rural recovery we are baking in our numbers, because I think the fact remains, as we know, that numbers have kind of bottomed out to a large extent, right? And we were a few quarters back, as we all know, the FMCG volume growth was kind of negative for many quarters. In the last few quarters, it has turned kind of positive, low single digit up, right? So fundamentals have bottomed. We're not expecting a huge recovery from here in, but I think at the margin, sort of slightly higher spending towards kind of welfare schemes and subsidies should help rural recovery. Obviously, we are carefully watching how the monsoons play out and how the sowing season happens, and I think a lot depends on that as well. But broadly speaking, directionally, we do think the rural segment should somewhat look slightly better than they have been in previous quarters.
If you like this video, then like, share and subscribe to ET Now.